Good afternoon. It's Business Spotlight on Mitvplus. I am Kachi Cliff. As the federal government intensifies effort to attract investment into Nigeria's vast mineral resources and halt the export of raw ores, Exploration Geophysics on Monday raised concerns that the country could be one day forced to import materials as it is currently extracting and exporting if strategic deposits are not deliberately conserved. The warning came as the Minister of Solid Minerals Development, Dele Alake, said the federal government was strengthening geoscientific data, mineral exploration, and professional capacity to transform the mining sector into a major pillar of Nigeria's economic diversification. The Nigerian Association of Exploration Geophysics, however, argued that the push for value addition and increased mining must be matched by a national conservation policy to protect selected high-grade and strategic mineral deposits for future generations and Nigerians' long-term industrial development. The contrasting but complementary messages emerged at the fourth Annual International Conference and Training Workshop of the Association in Abuja, where professionals examined the role of geophysics in resource exploration, environmental management, and infrastructure development. The federal government has pledged to facilitate the remobilization of exploration activities at Kolmani oil field in Bauchi State. The chairman of the Revenue Mobilization Allocation and Fiscal Commission, Mohammed Bello, made the commitment on Monday during a verification visit to the oil field. Bello said the commission was at the site to assess the current state of the project and advocate for its continuation, describing the development as important not only to Bauchi State and the Northeast, but to the entire country. The Revenue Mobilization, Allocation, and Fiscal Commission chairman explained that the government is ready to return the momentum of the project that once started in 2023. The chairman said the commission would assess the project and report back to the relevant authorities to support efforts aimed at reviving the exploration activities. The Nigerian Railway Corporation has released preliminary findings into the train derailment at Warri Itape that occurred on June 8, 2026, which killed 4 people and injured 64 others, even as the independent investigation by the Nigerian Safety Investigation Bureau remains ongoing. This was contained in a report made available to the pressmen. The NRC said its internal inquiry identified a possible sudden bogie or wheel defect that might develop while the train was en route, potentially causing abnormal wheel-rail interaction, excessive impact loading, and loss of running stability. The report, however, stressed that the findings remain a working hypothesis depending on the outcome of the SIB investigation. The corporation further said the definitive cause or causes of the accident will be determined through comprehensive analysis and will be set out in the final report. The internal injury inquiry also identified the possible manner of a brake application as a factor that may have contributed to the severity of the derailment, but the NRC cautioned that these two had not been established as a definitive cause. Nigeria's push to revive investment in its deep-water oil fields gained fresh momentum as Nigerian National Petroleum Company Limited and its partners signed agreement expected to move the proposed Bonga Southwest Aparo project, estimated to attract up to $21 billion in investment closer to a final decision investment. The project, located in oil mining lease 118, is expected to become one of Nigeria's biggest new water development, with a projected peak production of about 175 barrels of oil per day and 140 million standard cubic feet of gas per day. The NNPC Limited and the OML 118 contractor parties, Shell Nigeria Exploration and Production Company Limited, Esso Exploration and Production Nigeria Deepwater Limited, and Nigeria Ajib Exploration Limited, executed an addendum on the OML 118 production sharing contract and an addendum to the dispute settlement agreement. The agreements give effect to a new fiscal and commercial terms approved by the federal government to support the development of the Bonga Southwest Akparo project. The development is particularly significant for Nigeria, which has struggled in recent years to secure a major investment in its deep-water petroleum sector, despite possessing some of Africa's largest offshore and gas resources. Energy experts and economists have backed the proposal by former Vice President Atiku Abubakar for a review of the federal government's petrol subsidy policy, urging President Bola Tinubu to introduce targeted measures to cushion the hardship caused by the removal of the subsidy. The experts who spoke separately on the development warned against a blanket return to the old subsidy regime, stressing the need for transparency, accountability, and proper implementation of any intervention. They argue that while the removal of subsidy was necessary, the federal government has not adequately managed its consequences, particularly on the rising cost of petrol, transformation, food, and other essential goods. Atiku, the presidential candidate of the African Democratic Congress, has recently proposed the return of petrol subsidy if elected in 2027, arguing that Nigerians had not sufficiently benefited from the savings generated by the removal of the subsidy. He said his proposed intervention will be targeted, capped, budgeted, time-bound, and independently audited, with the objective of supporting domestic production and shield consumers from excessive petrol price shocks. Meanwhile, Nigeria's dependence on imported petrol showed further signs of rebounding in July as supplies from domestic refineries dropped sharply, forcing a bigger contribution from foreign imports despite the country's expanding refining capacity. Latest statistics on Nigeria's midstream and downstream petroleum operations for July 2026, published on Monday, show that the domestic petrol supply fell by 21% within 1 month, while petrol import rose by 9%. The development points to the continuity challenging facing Africa's largest oil producer as it seeks to replace decades of dependence on important petroleum products with output from local refineries. The fact sheet showed that total premium motor spirit, popularly called petrol, receipts declined from 50.6 million liters per day in June to 45.5 million liters per day in July, representing a 10% drop. The National Pension Commission The National Pension Commission has disclosed that cumulative retirement savings account registrations under the Contributory Pension Scheme rose to 11,183,475 at the end of the first quarter of 2026. According to PENCOM's first quarter 2026 report released Cumulative RSA registrations grew by 143,248 accounts during the 3 months, up from 11,040,222 recorded at the close of the fourth quarter of 2025. Highlighting in the momentum in account openings during the period, the Commission stated the quarterly cadence is materially stronger than the 111,864 openings in Q4, and it reflects both improved digital onboarding and sustained public sensitization. The steady expansion in contributor numbers coincides with broader financial surge across the pension sector, where total assessments under management have surpassed 30 trillion naira. Established following the enactment of the Pension Reform Act of 2004 and amended in 2014. The CPS replaced the pay-as-you-go defined benefit scheme to safeguard retirement funds through a fully funded, privately managed pension architecture for public and private sector employees. Despite the growth in registrations, active pension membership currently covers 12.1% of Nigeria's estimated 92 million workforce. The industry analysis and regulator emphasized that deepening the pension penetration remains a critical hurdle, particularly across the nation's vast informal economy. The European Union and the United Nations Industrial Development Organization have intensified efforts to boost Nigeria's renewable energy capacity with the 620 kilowatt Bangalada Dam small hydropower project in Gombe State, emerging as a model for powering agro-industrial development. UNIDO, with the funding support from the EU, on Monday organized a capacity building workshop in Gombe to strengthen the capacity of policymakers, project developers, financial institutions, and other stakeholders to develop and implement small hydropower projects. The workshop on Monday also featured the fourth meeting of the Project Steering Committee, with participants explaining the potential of small hydropower to expand electricity access, drive rural development, and support agro-processing. Speaking at the event, UNIDO representative and sub-regional director Pilver Johnson said Nigeria has an estimated 24,000 megawatt of hydropower potential, with about 3,500 megawatts coming from small hydropower. Nigeria is increasingly looking to deposit money banks to help close a 20.5 billion dollars financing gap in the electricity sector as the federal government struggles to mobilize the capital required to expand reliable power supply and accelerate renewable energy development. The funding push is opening a new avenue for deposit money banks, some of which have been exposed to the financial difficulties of conventional power sector after lending to investors in electricity, generation, and distribution. The latest move was reinforced by a 50 billion naira financing agreement between the Rural Electrification Agency and Alpha Morgan Bank to support renewable energy developments working on electricity projects in underserved communities. Under the facility, the bank will provide a revolving project to finance enabled developments participating in the REA programs, particularly projects under the Distributed Access through Renewable Energy Scale-Up Initiative. Nigeria's monetary authorities face a difficult policy balancing act, which is to lower interest rates and make credit more affordable for businesses and households, or keep borrowing costs high to preserve the high yields that have helped attract foreign portfolio investors. The Central Bank of Nigeria has kept its monetary policy rate at 26.5% since cutting it by 50 basis points in February. The decision reflects the need to consolidate progress on inflation and maintain confidence in the naira, even as tight financial conditions continue to weigh on businesses. The dilemma is becoming more visible as inflation moderates. Recent data show headline inflation at 15.43% in July, while economic growth projections have improved. At the same time, high lending rates continue to constrain access to finance for businesses seeking to expand production, invest in equipment, and create jobs. For investors, however, Nigeria's high rates environment has created an attractive market for naira-denominated assets. Portfolio investors can earn substantial returns from government securities and other fixed income instruments, particularly when combined with improved foreign exchange stability. Nigeria's external reserves have added $7.09 billion since the start of 2026, rising to $52.66 billion by 19th of August. As the country's foreign exchange position continues to strengthen, figures from the Central Bank of Nigeria has shown that the reserve balance has expanded by 15.6% from $45.57 billion recorded on 2nd January. The latest increase represents a significant improvement in Nigeria's external liquidity and gives the monetary authorities a bigger buffer to manage foreign exchange pressures and seek the country's international obligations. The accumulation, however, has not been entirely interrupted. Reserves declined by $855 million between 1st of April and 7th of May, dropping from $49.18 billion to $48.33 billion. The balance subsequently recovered, adding $4.33 billion in roughly 3 months. Nigeria's reserve stock crossed $50 billion in June and climbed up to $51.06 billion by 19th of June. It moved above $52 billion in July. The latest figures show the pace of accumulation retained firm in August. From $51.94 billion on the 3rd of August, reserves increased by about $715 million to $52.66 billion by 19th of August. AFC Capital Partners, the asset management subsidiary of the African Finance Corporation, has launched its $150 million infrastructure climate resilient fund in Nigeria following regulatory approval from the Securities Exchange Commission. The formal signing ceremony held in Lagos on Monday established the SEC-registered closed-end vehicle to channel domestic institutional capital into critical green infrastructure across the country. As a part of a larger $750 million Pan-African climate initiative, the Nigerian platform aims to unlock investment from pension fund administrators, insurance firms, and sovereign wealth funds, targeting an overall project financing pool of 3.7 billion naira. Speaking with journalists on the sidelines of the event, the Chief Financial Officer of the AFC Capital Partners, Nigerian Limited, Chika Dotimi Beke, stated that the immediate priority is capital raising and deployment. The federal government has declared today public holiday to mark this year's Eid-ul-Maulud. The Eid is marked by millions of Muslims worldwide to celebrate the birth of Prophet Muhammad. Against this, the background of the floor of the Nigerian exchange NGX would be under locks and key as players will be celebrating this holiday in their respective homes. However, Abiola Ismail is on standby for the summary of market report as it ended on Monday, right after this break.
Thank you, Kachi. Market activities on the floor of the exchange will be closed today as Nigerian exchange is locked up in honor of this year's Idema Road celebrated in remembrance of the birth of Holy Prophet Muhammad, peace be unto him. The Nigerian equities market extended its bearish strength on Monday. Welcome to Stock Market Report on Business Spotlight. I am Abiola Ismail. Market activities on the floor of the exchange will be closed today as Nigerian exchange is locked up in honor of this year's Eid al-Maulud celebrated in remembrance of the Holy Prophet Muhammad, peace be unto him. The Nigerian equity market extended its bearish trend on Monday as investors sell-offs pushed key indicators further into negative territory. The oil share index dropped by 265.99 points to close at 237,085.17, representing a decline from Friday's benchmark of 239,351.16. Correspondingly, overall equity market capitalized shelled 137.12 billion naira during the trading session, contracting to 154.40 trillion naira compared with 154.53 trillion recorded at the close of the previous week. Over the 5 days trading period, the benchmark index fluctuated between a high of 241,611.23 points on Tuesday and lower of 239 285.17 points on Monday, recorded an average of 240,167.17 points for the week. Trading activities across the exchange yielded a total turnover of 668.68 million shares exchanged across 45,817 deals in equity sector. Sectorial performance reflected broad selling pressure across multiple market segments. The Nigerian NGX banking index dipped to 2,458.04 points, driven down by notable losses in Tiers 1 and Tiers 2 lenders, including Fidelity Bank PLC, which dropped 6% to close at 18 naira 80 kobo per share, and United Bank for Africa PLC, which lost 1.44% to settle at 44 naira 45 kobo per share. Additional pressure came from First Old PLC, falling 1.58% to close at 127 naira 90 kobo per share, and Wema Bank PLC declining 1.19% to close at 28 naira 95 kobo per share. However, some financial concerns bucked the downward trend, led by Access Holdings PLC, which advanced by 1.85% to close at 27 naira 50 kobo per share, and Guaranteed Trust Holding Companies PLC, which added 0.55% to close at 127 naira 70 kobo per share. The insurance sector also experienced notable contraction, with the NGS Insurance Index falling to 1,080.69 points. International Energy Insurance PLC posted the heaviest sectoral loss, plugging 9.82% to 3 naira 49 kobo, closely followed by Guinea Insurance PLC, which sank 5.19% to close at 73 kobo. Coronation Insurance PLC and Prestige Assurance PLC also registered declines of 3.85% and 3.47% respectively. Conversely, Sunun Assurance Nigeria PLC provided a bright spot within the insurance space, gaining 3.33% to close at 3 naira 10 kobo per share. Despite the prevailing market downturn, several individual equities managed to record notable price advances. Red Star Express PLC topped the Guinness chart, surging 9.86% to finish at 16 naira 15 kobo per share. United Press PLC followed closely with a 9 naira 38 kobo per point, increasing to 5 naira 25 kobo per share, while UPDC PLC rose by 5.97 points to close at 3 naira 55 kobo per share. Adel McCall PLC and Japan Gold and Ventures PLC also posted positive performances, appreciating 3.90% and 2.76% to settle at 4 naira per share and 2 naira 98 kobo respectively. On the flip side, Naimet International Pharmaceutical PLC joined the top losers list after shedding 9.38% to end the day at 7 naira 25 kobo per share. Beyond the main equities market, activities in derivatives and fixed income products remained mixed. Exchange-traded fund recorded 1,430 trades with a volume of 368,055 units, led by price gainers in vertical industrial ETF and new gold ETF. That's all we could bring for you today, as we have the market close already for the celebration of Eid al-Fitr. I'll hand you over to Kachi for the rest of the story after this break.
Thank you, Abiola. And that ends the and that's the end of Business Spotlight on MITV for today. Join us same time tomorrow for more business stories. I am Kachi Cliff.